Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Colin Bird, who's Executive Chairman at Xtract Resources. How are you today, Colin?
I'm good, Zach. How are you?
I'm doing well. One day we're in Zambia, the next day we're in Australia. What's going on at Xtract?
Well, we made that announcement. I think it came out yesterday, didn't it? On the fact that we're going to carry out the second phase of ore sorting. Now, as you know, the first phase was done, I guess, complementary almost, to actually test for amenability to ore sorting. The reality, of course, is that there was no optimization, no real engineering, but worked into the model. The Bushranger project became viable at $10,000. Now, you know, when copper was around about 8, 7, 8, that wasn't too exciting, was it? But you know, if you look at all the forecasts that we're seeing nowadays, Zach, some of them are outrageous. You know, the forecasts are absolutely outrageous. But when I sit back, knowing the mining world as I do, obviously people know it better than I do, or a trained analyst, but I don't know every single project being developed or has been discovered. But there's one certainty in my mind. One is that when in 2017 I went on the copper trail, it was based entirely on demand. What's absolutely taken me by surprise is the supply side is virtually non-existent and wrecked. Current supply is in demise. You know, Codelco came out with a weekend announcement. We've seen what's happening all around the world. So not only are existing operations getting older and unable to supply current copper demand, you know, new supply just isn't there. Just isn't there. And we all know that to develop a porphyry mine from discovery day to actually starting the ball mills, it's probably 12 to 14 years, which is not a great deal of help. So, you know, there is going to be a next generation of projects. For those projects to actually, for the major mining companies, well, you know, they can't stay as risk averse as they are, but they'll always be risk averse. For them to commit to the $1 to $2 to $3 billion of expenditure for the new big projects, that is, they've got to have a reasonable confidence that the metal price is going to be 12,000 and above. And, you know, that puts Bushranger right into play. So they're the Xtract shareholders. They've got a project which is in a favorable jurisdiction. It's already got 1.1 million tons at Racecourse of contained copper, a couple 100,000, I think it is, at Ascot. And it's open-ended in whichever direction just about you want to look. So, you know, there's a hell of a lot more than 1.3 million tons of copper. It's the biggest discovery in the Lachlan fold for years. So that project is now into play for the next generation of copper mines, and is bound to affect the attention of the major companies, the big ones. There's only a handful of companies who could handle a project like that anyway, Zach. So it was prudent, in my opinion, with all what's going on in the copper world, the copper forecasting price world, the availability of new mines in pretty grotty jurisdictions, if they are around. Prudent to basically do that second round of ore sorting, more definitive, more optimal, and then if we like the result, we can actually reintroduce it into the financial and technical and mine planning studies. So that's what we've done. I wouldn't like our shareholders to get too worried about what is it going to cost. Are we suddenly jumping around all over the place and drop Zambia now, running back to Australia? I'd like to reassure the market that just is not the case. This entire exercise is not costing much more than $80,000. You know, we're back to amenability and what sort of mass pulls you get, how much ore you reject, how much rock you reject, how much ore you basically keep when you reintroduce that into the model, what it does to the model, and then of course testing it against a range of copper prices. So our shareholders, and as I say, would-be shareholders and the market in general, should not get anxious about us blowing an old ton of money at that project. That project is very much alive. That project is not going to be drilled until we too, like majors, have got the confidence that it is a next generation mine. And of course, its interest is reignited by the fact that we're looking forward to a sustainable gold price, well in excess of 10,000 in the next few years. So, right work to do at the right time. Not a budget buster, but definitely keeps the project very much alive and going, and in the general trade market's attention. That's the reason we've done it, Zach. And as I say, it's more detailed and sort of more sophisticated test work.
But is it the case that Bushranger was an interesting prospect before, but in the current environment, it actually looks like quite a compelling one?
Compelling might be a bit strong, but it's certainly re-rated itself, Zach. Well, no, it hasn't re-rated itself. The consensus forecast for copper has re-rated it. So it really sits, I guess, compelling now, I sort of disputed compelling, but I would certainly say puts it in the next generation of potential big porphyries.
And do you think that obviously, the shares around a penny, the market's basically saying we're ignoring the value that Bushranger may have?
I think they are. I think that when when we got that sort of disappointing result back in October, November last year, that the market just ditched it and said that's a dud project, which was wrong really. You can't say 1.1 billion tons is a dud project. You can't drill 35,000 meters of boreholes and only have one which didn't actually go through mineralization, and that was on the eastern section and was as expected. So we sort of identified a very, very, very large mass of copper, 50 miles from Sydney, very favorable jurisdiction, and a project which is open-ended with another section called Ascot, which is yet to be fully explored, and in depth and direction plunge and all of those good things. So open-ended, the metallurgy can certainly be improved upon. I wouldn't say this second phase even is optimization. It's further test on amenability and determining which is the best upgrade technique to pursue. So we're still not in final optimization. But the one good thing for us, Zach, is we've got that high grade component, which always gives you 5 or 6 years. In 5 or 6 years, you can pay off a big chunk of capital. So we've always got that to put into the mine planning. So your ore sorting might not even come in for the first 5 or 6 years, or you might blend. But it gives you that, to have a high grade portion gives you a stack of optionality, which a lot of projects haven't got.
And so what to summarize, what will be the main drivers for Xtract for the rest of the year?
Well, obviously, we're going to do this study, and that's not a main driver. That's something which is work in progress for the Bushranger project. The main driver is to get drilling in the northwest and of Zambia. And I expect to be, we're working up there now. We're currently repairing roads. There's a bridge where we can't get the drill machine over. We've got to get that fixed. And we're getting the northwest drill ready. So that will be our next it is the current focus, and hopefully we'll be drilling in the not too distant future.
Well, we look forward to that. In the meantime, Colin Bird, Executive Chairman at Xtract, thank you very much indeed.
Thank you, Zach. Thank you. Always nice to talk to you.